Hello traders, welcome to this video on the euro dollar and pound dollar. My name is Chris Forsick from Elite Currency, and let's start with the euro dollar as always. So we had basically quite a slow, indecisive week last week, maybe because of the FOMC statements. We got some news events, of course, coming up on Wednesday, and it depends. What will the U.S. Central Bank do? Will they start to tighten things and maybe start to think about interest rates increases? I think the market is waiting for some clarity on that, and it could be a reason why we saw a kind of converging pattern here. We have a lower high, we have a higher low, and we have that twice more. Last week we made a video, let's see, before the market opened around here, and I was leaning towards a bullish continuation if price was able to break above this channel. Basically, we had, after that, the market open, we had a slight lower low, a slight dip, but did not break this bottom. And we basically had a bounce roughly at the head and shoulders level, left shoulder head, right shoulder. So yes, there was a bounce. The bounce didn't go that far. It didn't break the previous top, but it reached the 144 EMA. So we had some breakout here above the 21 EMA for about 65 pips. And then we saw a correction as the market was went into consolidation mode. So we had a challenge of the support, but didn't break the bottom. Then we had a good rally as we expected, but then it fell short of the target as the market went into the consolidation zone. So ultimately, though, I think that the euro dollar did not go into a very clear bearish mode. It had a slight edge to the upside, I think. I think that's valid to say. We had a decent bounce if one caught the head and shoulders level here from 112.50-ish. It had more than 100 pip bounce, so I think there was more upside potential. If one caught the turnaround at the 144 rate, there was even some downward potential, I think. But ultimately, as now the next week started here mid-December, I think the market is waiting for that news event more and more. And well, I think that if we get, of course, depending on the news event, will have an impact. But if we get a break above these fractals, above these trend lines, above the 21 EMA again, I think we should see a more serious rally into 114-ish, maybe 114.50, maybe 115. But I think that's it, because otherwise we're running into a big resistance zone here at 115.25 and 116. So although there could be a retracement, I do think that there'll be a bearish bounce and continuation. So I don't know how the news event will fit within this technical picture or the other way around, depending on your personal view of what moves the market. But it could be, for instance, that we have some disappointment at first, and then we see price moving up. Disappointment that the Fed is maybe not moving as fast. See the euro dollar up, and then maybe there's some side note that makes it go down again. Whatever the reason is, I think there's a fair chance there'll be some retracement. Looking at the daily chart, we're day 12. So if, of course, the Fed responds more aggressively than expected, the euro dollar could certainly fall too, of course. In that case, we're going to look for a breakout below the support trend line here and the support zone like this. And if there's a strong daily candle pushing through that on Wednesday, or any day really, to be honest, most probably if there's a strong daily candle pushing through 112.50 and closing near the low, closing below the support zone, closing below this fractal. The fractal itself is around 112.27, excuse me. Of course, that would be a bearish breakout. In that case, we have strong momentum, consolidation, strong momentum, correction. We should see this euro dollar fall and continue to 110, maybe 109, 108, 107.50, and there's plenty of downside targets left. So, but yes, I would need that break below the trend line. Yes, I would need a strong daily candle to confirm that. And once there's a daily candle, I could look on the next day on lower time frames for a small pullback, maybe a small bear flag on the hourly chart, and then a follow through to the downside. Okay, targets, as I said, putting a fib on this swing. The 78.6 fib is the ideal target, I think, at 110. 110, of course, as well, a psychological round level as well. So that would be certainly, in my view, the main target if we get that bearish break on the daily chart. Otherwise, if we don't, there is, and we get a break to the upside above the 144 EMA, above these resistance lines, above the 21 EMA, there is a fair chance of getting some retracement as well. But yes, the upside space is certainly limited to 114/115, whereas the downside has a lot more space in my view. A bearish bounce at 114, 114.50, 115 could also be very interesting because if there's a good candlestick pattern on the 4-hour chart or daily chart, it could be very interesting for a bearish bounce down to 110 as well, by the way, in my view, if there's a good candlestick pattern to confirm that bounce. All right, pound USD. So basically, all right, we see a little bit of bounce here at 123.50-ish, basically, and it did end up as a bullish candle, but of course the momentum is certainly strongly bearish. The trend is bearish, and there's plenty of space before we fall and test the previous bottom on this weekly chart. So I think that the bears are in control. Price is clearly below the 21 EMA, has stayed below the 20 EMA for very long. But yes, a bit of a slowdown here last week, certainly. Let's see, the beginning of the week last week we saw a retracement and then a continuation, and eventually a bit of a bounce back up again. So it was a neutral kind of week, slightly bullish week in fact. Yes, a bit of a falling wedge pattern with divergence between the bottom could indicate on this time frame that a retracement to the 144 EMA is possible. That's typical target. In my SWAT course, I explained that if there is divergence between the bottoms, the 144 EMA or the tops, the 144 EMA is the main target. With this falling wedge broken, the divergence, the price above the 21 EMA, some retracement up to the 144 EMA would not be strange. But again, here the news event, certainly the main trigger. Of course, if the news event is bullish for the dollar, I do think that it will continue lower, and we might see a fall lower towards the next fib, the 50 fib at 128.44. Of course, 130 is a psychological round level, and it's a target to keep in mind as well. Whereas, of course, if the news event is slightly bullish for the pound dollar, then we could see a retracement up to the 144 EMA and 233 EMA zone at 133.50 and 134. So yeah, basically a bounce up could fit within that retracement story, but then a continuation lower and a follow through to the downside to the force towards the 130 and 50 fib makes sense. Okay. If there's an immediate break, I would like to see a daily candle push below 130.170, 132 with a close near the low, a close below those zones, and there could be an immediate follow through to the downside. If we get the retracement, then once again 133.50, 134, I think would be the logical space or spot for a bounce, considering these tops and bottoms as well. Here, these bottoms and these tops, and the 20 EMA zone for a end of a bullish retracement and the continuation of the bearish trend. All right, that's it for now. Thank you for joining. Check out elitecurrency.com for more of our solutions, courses, automated trading, EAs, you name it. All right, and wish everyone safe and good trading. Cheers, bye-bye.